participation from small town people in Indian stock market has risen to almost 15 years high as fear of uncertain future is driving people across the country to stocks for savings while work from home culture has generated greater traction to stock as a medium of other income. Hi, this is Rajesh Mascarenhas from the Economic Times. In this video, we are going to discuss what led people across India to participate aggressively in the stock market since the beginning of the year. Over a crore new investors have entered Indian stock market this year, mainly because of a growing awareness about benefits of long-term investing, then ease of doing trade with disruptive technology, and most importantly, the decline in cost of trading, plus attractive and special packages product offered by the brokerages. However, the most important point here is direct investing in equity is not restricted only to major cities like Bangalore, Hyderabad, Ahmedabad, or Kolkata. Smaller cities, especially from northeastern, where there is hardly any exposure to equity, are also participating in the stock market. Manipur, Mizoram, and Arunachal Pradesh have seen almost 100 to 200% jump in new investors registration so far this year, while other three siblings of the seven sisters, Tripura, Assam, and Nagaland, also reported investor addition of 60 to 70% so far this year, according to BSE data. There are several reasons for such a massive interest in stock market.
We have seen at least 300% growth, minimum 300% growth in the northeastern states and also Bihar. The reason why I feel that these states have shown strong growth in the demat accounts is sustained increase of per capita income that we are seeing for the last few years, coupled with a good internet connectivity and now a deeper penetration of Aadhaar. All these three things put together and a good stock market has helped the people in northeastern states to approach capital market and to choose stocks as an investment.
Now KYC is much easier. People no need to go to their nearest branches with physical copies. With an Aadhaar card, you can open your demat account plus trading account plus even savings account within few minutes. This has also led for some kind of traction for stocks. With decline in FD rates from 8 to 9% to current 5 to 6%, and sharp run in stock indices 15, 20, 30% in the last 6 months has also created buzz among common people that stock market is giving 3-4 times better return compared to their fixed assets, fixed deposit or mutual fund SIPs.
Millions and millions of people are coming on board and opening up their first demat accounts. As a company, we ourselves are opening upwards of 2 to 3 lakh demat accounts per month, and a lot of these accounts now are being opened from tier 2, tier 3 towns across the country, which is very exciting because that's where a lot of the future growth lies. And India's equity participation rate is obviously going to increase as the time, as years come by, and a lot of this growth that we're seeing today is because of increased internet penetration, smartphone internet penetration across the hinterlands of the country, alongside things like Aadhaar-based onboarding and very welcome government policies to really have a lot of people, have the masses open up their demat accounts and begin investing in the Indian economy.
Now, because of the aggressive expansion by Jio and Airtel, and especially through fiber network, the internet connectivity is better now in rural villages. So people are trading full time, and they also got excess time because of the work from home culture. So this is also the factor for such a sharp rise in retail investors in stock market. Unlike in the past, the retail investors have not been driven away by the crisis-led volatility in this market. Instead, we have seen retail investors are aggressively buying quality stocks for every dip. Their ownership in Indian stocks has risen almost 15 years high. They currently own more than 10 lakh crore worth of shares, with the number which we have never seen. Now we have to wait and watch whether this trend will continue or not, because offices across the country have reopened and stocks as well as indices are at all-time high.
I feel that this is just a start, and as per capita income increases, the participation from these states into the capital market will be even more in coming years.